How's it going, everyone? It's Sam. I want to go over why I really don't like selling my stocks, except for in really small quantities. If it's just an individual stock, maybe, but I am not looking to ever sell out of all my positions. And I want to go through what's happened the last few days because I had a lot of people reaching out to me talking about selling stocks. I've seen a lot of different YouTubers talk about selling their stocks before several things happen. A lot of people are predicting another crash. And we were up over the last few days. So I want to go over, everything that's happened and why so many people thought the market was going to crash and why I just don't ever see myself selling out of positions for something that's happened like this. So let's take a look here. So this is the change in cases recently over the last couple days. As you can see here, before things started to open up, we were sitting around maybe 15, 20,000 cases a day, and then it spiked up to about 44,000, and now it's back down to the mid-30s. But a ton of people last week, seeing all the cases going up, saw that the stock market was in jeopardy, they start talking about selling stocks. Now let's take a look at another thing that happened. Certain parts of the country are shutting down again. So as you can see here, Texas ordered bars to close and restaurants to reduce capacity. That at the same time as we've already heard this for a while, that the GDP was going to decline by up to 42% in the second quarter. Not only that, last week, which is what a lot of the YouTubers were talking about, pension funds are set to dump stocks after epic rally. So a lot of these pension funds are set up so they are supposed to keep so much in bonds and so much in stocks, and a lot of them had a very high position, a lot of bonds for a while because of the fact that all the stocks went down. So then they moved more money into stocks, and then the stocks have rallied really well. So they were talking about pulling back out of the stocks and putting back into bonds. Now, all of this has happened, and so many people message me about switching and selling my stocks and them selling their stocks, and through no fault of their own. I don't blame them for trying to time this out, but you're essentially trying to time the market. And if we look since Friday when the market closed, we're up 3%. So a lot of stocks are up a lot more than that even. So we look at all this competing information that tells us we should sell, and yet it's not the best idea to sell. So I just want to talk about why I never sell. So first of all, I don't sell because if it was that simple, everyone would be doing it, right? So just like those get-rich-quick schemes that you hear online, sure, you can try to do it, but if you were that talented, first of all, that's really lucky. And second of all, there are probably other people that are that talented, if you're that talented, trying it out one of your first or second times. And we just generally aren't very good at timing the market. So if you were, then everyone would be doing it. Second of all, the market is very hard to predict, obviously. So we had all this negative information one week, and we start going up and increasing in price this week. Now, part of this is just due to the fact that we can't really control what happens in, the news, and we can't really control the narrative. So it's really hard to predict, especially right now, what the federal government's going to be doing. You see Powell just out there shooting his money every which way. He's buying up stocks. We got news that he was buying individual bonds, or the Fed was buying individual bonds from a handful of different companies, and this can really drive up the price of stocks. Number 3, you are kind of competing against the general trend. So the general market or the stock market index goes up over time. It generally goes up 7 to 10% each year. So you're fighting against that. So you not only have to guess it correctly, but you have to guess it correctly when most of the time it's not going to go down. So most of the time the market's going to go up, and it's kind of how I view it is it's going against the house. So if you're at a casino, sure, you can win a hand every once in a while, but they're going to win most of the time. So if you try to do this, let's say you've accumulated $500,000 of money throughout your life, yeah, you can take it out and go to the casino and try to win some extra money, but chances are you're just going to lose a little bit of money. And that's kind of how I view it with these stocks. So number 4, in the long term, this doesn't really matter. So in the long term, if I can save myself 1 or 2%, I don't really think it's really that worth it to take all the money out of stocks. Over time, I guess it could make a little bit of a difference, but I don't think that over the long term, putting this much pressure on myself to really be able to tell when the market's going to dip is going to be worth it. Now, kind of tied into that is I'm a long-term investor, so I think my time's just better spent trying to research companies. So yeah, I can try to research when the stock market's going to go down. I can fight against the general trend. I can try to time it out correctly, even though I have no idea what's going to happen in the economy, what's going to happen in the government, what's going to happen with the virus cases. But I could just spend that time researching really good companies. If I could find a good company like Facebook or Tesla a few years before they became Facebook and Tesla as we know them today, that's a lot better spent than trying to time the market. Another reason I try not to time the market is because I think that if I were to do that, I would become more of an emotional investor. So instead of basing my trades and my thinking process behind what's going to be good for the long term and trying to buy into companies I really believe in, I think I would start trying to kind of swing trade or day trade and really get emotional. And when I saw the stock market go up, let's say, I might try to buy in real quick because I figure it might not go back down. And I just become more emotional in general, and it would become another stressor. Now, another reason is a lot simpler, just for the tax reasons behind selling out of my positions. So in my tax advantage accounts, it wouldn't really be an issue because I would keep the money in cash. But in my brokerage accounts, I would have to start paying taxes and have to deal with all that. And I just don't really want to do that, especially if you're a long-term investor and you have a significant amount of gains. You probably don't want to have to pay taxes all on those gains at the same time. And something that's a little bit more relevant to me, just because I don't have those massive gains after years of investing in the stock market, is just that I do have stocks that are getting close to their dividend date or their ex-dividend date. So if I have something that, let's say next week a stock is going to pay me, and let's say it's going to pay me, it's an 8% dividend yield stock, so that means next quarter they are going to pay me 2%. Well, I can miss out on that 2% of the stock that I own. So in general, I make maybe 4 or 5% in dividend yield. So if I miss out on a quarter of that, that is 1% of my stock market portfolio. So that's a pretty significant amount right there. So I would have to be able to beat the market, not just guessing that it's going to go down, but also beat it by that safety margin. So that is just one more thing that I have to try to beat, in addition to all the other metrics that I have laid out before, that I would have to just be able to time it and do all that correctly also. And the last thing is, I just think my time is better spent in my brain and my kind of my mindset and my my space in my head is better spent thinking about either those stocks or just other opportunities and different things in my life. So yeah, I can spend all my time and energy and stress trying to figure this out, or I can do something like YouTube. So I could have never even gone into YouTube because I was too worried about timing the market and day trading and stuff. Or I can try to get into new ventures that make more money. And if I can save myself 2% in a stock market portfolio that has $10,000, that's $200. If I can find something that makes me $200 instead, that is, I think, time better spent, because I can go back to that and continue to do that consistently over time, like YouTube or like some other business venture. And it's a lot less stressful. It's something that lights me up instead of something that would just make me nervous. And that is just kind of where I land on it. So I think there's a lot more potential in just continuing to invest in the market and not trying to time it out. I think it's a lot better over the long term. And I just am way more comfortable with it. I think it's a better use of my time and probably your time too. So if you agree with that, let me know in the comments. If you timed it out and you actually did well for some reason, maybe you sold individual stocks and then you bought back in at a lower price, I'd like to hear that too. If you guys do want to sign up for some stocks, there's a link below to Webull, and you can get 2 free stocks, one worth up to $1,400. So pretty good use of your time there. And let me know what you guys think in the comments below. Thank you for hitting the like button, and I will see you in the next video. Bye.